Good day all. Welcome once again to my channel. Today I'll be showing you a simple strategy which has worked for me in other fields, in the fields of life, such as the buying of shares and markets, that is the stock market. And in this particular strategy works basically on buying of items when the price is low. Just like other items in the market that we buy when it is low, we keep and sell when it is high. But the whole principle about this strategy is to target when it is low, which is down, then you buy. Then when it is high, you sell. In this strategy, in the crypto space, the goal is to make money from buying when the price is low and selling later when the price is high. Just as in the stock market, when the value of shares depreciate, you buy. And when you add up to your existing shares, that is to top up existing shares. But if it's for fresh buying, you buy it when it is low. And you wait again and target when it is still low and still buy more to add. The same apply in the crypto space. You buy when it is low, just like you see these gainers and losers. You buy when the prices of crypto and stocks go down, you buy. Then when the price goes up, you sell. That is the target and the principle that we are going to be discussing here. And this principle, it's a very simple strategy that helps you to make money with ease. There are two ways to engage this strategy. You engage this strategy in the long term and also in the short term. And this simple principle in the crypto space is known as the dollar cost averaging. So please stay tuned to the end to see how the strategy works in the crypto space. Remember that in the crypto space, there is high volatility always experienced in the crypto market. Once a coin drops in price, we buy a little and we wait and observe the movement of the market. If the price goes lower again, you still buy. So this principle, in order for you to effectively work out this principle, you click on you go to your using your technical analysis, which is your Bollinger Band strategy. You use your candlestick movement to give you a right and accurate assessment to pick a particular price to buy at the right time, so that when the price goes up, you make profit. So I'd like us to use the BTC at present. You click here. At present, we all know that BTC went as high as 31. This is BTC USDT. We know that BTC went as high as 31,000 USDT to 1 BTC. You can see the price. It went as high as this. If you observe very well, using the Bollinger Band, you can see that BTC went very high. And now BTC is experiencing a dip. This is where we are. BTC is experiencing the dip. So using this strategy, you don't fear about the dip because it's a calculative plan to buy when it is down. So you don't fear about the dip. You don't fear whether the market is still going down, because all your aim is to ensure that you buy at a very lower price, so that when the market goes up, you make profit. So let's say you have a target of $500 that you want to use to carry out trading for BTC alone. Using this strategy, you can see at this point that BTC came down. If you want to check the exact price on the market at this point, BTC was as low as 29,308 Naira 69 to a dollar. So at this point, what do? You buy a portion, let's say $60 portion unit of BTC. Or you can even buy it starting from this point, which is 29. Let's say you buy from 29,800, because you can see that from this 29,900, the value of BTC has already fallen. So using the Bollinger Band strategy, it's expected that the value of BTC is to rise. So once that value is to rise, you now buy a portion of it, let's say $60 to $100. That is at this point. You buy a portion. Then the market now drops again to this portion. You still buy, because your target is to accumulate a large quantity of this same coin, so that by the time it rises, you now make a great amount of profit. Then at this, you notice the price still goes down, and also using your RSI, you see that the value is at 10.43 in your RSI. So you still buy again, which has given you, the first time we bought 100, the second we bought another 100, the third we buy another 100, which has given us a total of $300 worth of BTC. So by the time it begins to rise up, you can now see the amount of profit is expected that you have made. And this now we are checking this using the 4-hour time frame. But assuming let's check it on the 1-day time frame. Using the 1-day time frame, you can see that BTC has dipped down to 27,100 and 100. That is, it has gone as low as that. So as at now, you can still buy using this strategy, because now we are using the current price of BTC. Using this strategy, you can buy, that is using this 1-day time frame, you can now buy your BTC at this point. You have $500 that you have earmarked for this trade. You can buy $100 portion of it, and you still observe the market. Though the market shows that it has started rising, using this green Bollinger that you can see, it has started rising, but you will still buy and still observe the market and see the direction of movement it takes. So peradventure, the market still dips down lower than 27,300. You still have to do what? Buy another amount again. Let's say another 200, making 300. So by the time the market begins to rise, that is to move in the upward direction, you now begin to amass all the profits that you are supposed to get. So that is using this Bollinger Band strategy. It enables you to study the market, to know the time that the market is down, because at this lower Bollinger Band, any market that has dropped down to the lower Bollinger Band, the next thing is expected for that market to do is to rise. So once you buy at this point, and you now discover that the market prices continue to dip, you don't fear, because in this strategy, using this strategy, you don't fear about the dip in the market, as you keep accumulating using your budget set aside to buy. So for the long-term period, doing the dollar cost averaging on a particular coin works based on the target set for yourself. For example, you set a target that between the next 2 months, you want to amass a certain amount of BTC in your wallet. Let's say you want, $500 worth of BTC in your wallet. So what do? You always set out your timer and set out timing and observe the market, that whenever the market dips, you buy a portion and you wait. This is the same BTC that went as high as $31,000. It is now 27. So you buy a portion of it, let's say 150 US dollars. So once you buy 150 USDT, you observe the market. Let's say the market still dips again, let's say to 26,000 or 25,000, you still buy another portion and you still wait. If it dips again, you still buy another portion. So by the time your time period that you've set for yourself, let's say in the month of May or the month of June, reaches, it's expected that once the market dips, the market is expected to bullish back, so the market will rise. So once the market rises back and it goes back and it rises and meets up with your time in a period of May, you have made massive profit, because as at the time you bought it, it was 27 USDT and 27,000. It was at 27,000 plus that you bought it, and at the time you are using it, it's now at 31 and maybe even 32, because there's a expectancy that the price of BTC can still go higher. That's when you carry out your detailed analysis on that coin, a particular coin that you want to use for the long time period. So my advice is to carry out a dollar cost averaging on crypto that you are very sure of, such as BTC, Ethereum, BNB. Let's say you have decided to buy a portion or an amount of crypto per month. It's best to target the dip. You buy the particular amount, the following week you buy again. The amount bought accumulates over time, and at the point of target, you must have accumulated a lot of profits when the crypto is sold. So using this Bollinger Band strategy, it shows you when to buy and when not to buy in order to make profit. Because using the Bollinger Band strategy, it shows you the upper, the middle, and the upper, middle, and the lower Bollinger Band, that lets you know that when the candlestick is at the lower Bollinger Band, you buy. So that, and it's expected that once it's at the lower Bollinger Band, even if it deepens more, it's expected after it dips, it will still rise. So I believe with this simple strategy, you have learnt and understood how to buy and buy using dollar cost averaging on the Binance app. And this same principle can work on other exchanges. Just as I said in my other videos, we are using this Binance app because of its high traffic volume. And also, other exchanges can still be used for this same principle. So you don't say because you're not using Binance, you won't use it. You won't use it to trade. And also, we should note that this principle works best on the Binance trade session. Because on the Binance trade session, you don't encounter liquidity in your trade. Let's assume you want to trade on this Arbitrum, for example. You can see the Arbitrum is dropping using the 1 day. So if you use your 1 hour time frame, it shows that Arbitrum is experiencing a dip, but not it's a mild dip. So if you now buy at this price now, that Arbitrum is 1.4464 USDT. Then later on, it drops. You still buy. Let's see what price it will show at this point. At this point, it's showing 1.43 USDT. So you now of 1.43 value of USDT of Arbitrum per USDT. That is Arbitrum USDT trade you buy. So it's expected that once it starts to rise, that it's experiencing a bull in the market, you now amass your profit massively. So once you buy it on your spot trade, you just buy a little portion. You keep adding to it. You keep adding to it. You keep adding to it so that by the time it increases, you've amassed and made great profit. This same dollar cost averaging can still be traded on futures, but not for beginners. But a beginner can use this same method on this trade session of the Binance app. Yes, the trade session. A beginner can trade with it and still make profit. All you need to do is to follow this simple strategy. Monitor your Bollinger Band, buy it when it is low, and you buy at a little quantity. When it deepens again, you buy more, and when it goes up, you now know that you amass massive profit. I believe this strategy will work for anyone that wants to put it in practice, and please do practice it and give us your results at the comment section. I would love to hear your output so that others can know that these strategies are really working. So it doesn't mean as if we're just talking about it, but these are strategies that work. They have worked. I've traded with it before. It has worked. So trade with it and give us your outcome in the comment section. I'll see you in my next video where I'll share with you another simple strategy on how to make money using your Binance app. Stay tuned and bye for now.